Hello traders, let's discuss one more strategy for bearish market. Well, this strategy is going to give you unlimited profit, but the problem with this strategy is it is also can give you unlimited loss. So if you are about to implement this strategy, then be careful. If market goes against you, then it may destroy you, and if market goes as per planned, then it can make you super rich. So without wasting any time, let's dive into it. So what is this strategy name? Well, this strategy name is synthetic short. So synthetic short, as per name, you can see here we are going to short some positions. So which positions we are going to short, where we are going to get break-even point? Well, can we discuss some current market example? Definitely, I'll be discussing one current market example as well. Now let's see what is this short synthetic actually is. If you see here, we are going to buy one at the money put, and we are also going to sell one at the money call. So here we are thinking that market is going to go down, then we have bought one at the money put that is also going to give you profit, and the other one where we have sold call that is also going to give us profit. As I said, this is unlimited risk, unlimited rewards strategy. So it is like bane to karodpati, nahi to rodpati. Now let's see how we can implement this strategy. Here if you see, then the strategy name is short synthetic and our market outlook is bearish, and we are pretty much sure that market is going to go down only. Now where our break-even point? Our break-even point is at strike price of long put, means at the money plus net premium which we have received because we have sold call and we have also bought put. So whatever premium we are receiving, that we have to add in the strike price of at the money, and if any deduction is happening, then definitely we have to deduct it. Risk and rewards both are unlimited, and we are going to get the rewards only when stock price fall, and definitely we are selling call, so we will be needed some margin as well. Now let's take one current market example of Bank Nifty and see how we can apply this strategy if our view about the Bank Nifty become bearish. I mean bearish means I'm pretty much sure that Bank Nifty is going to go down only. Then only I'm going to apply this strategy because here risk is unlimited and reward is also unlimited. Let's see how we'll apply this strategy. So here if you see, currently Bank Nifty is trading at 31,225. So if you see, call at the money will be at 31,200 and put at the money will be at 31,300. If you see the option chain, then if you see the golden ascent color, then last row of the golden ascent color in call and first row of golden ascent color in put side. If you see the option chain data on NSE website, then that row will be at the money. So here we are going to sell one call and we are going to receive 392 points, and we are also going to buy one put at 31,300, that is at the money for put, and we are going to pay 376 points. So totally if you see, we are receiving 16 points credit in our account. Now let's calculate break-even point. If you wanted to calculate break-even point, it is very simple. You have to add the 16 which we have got from this net premium received to at the money put, that is at 31,300, and you have to add 16. So break-even point will become 31,316. Here break-even means if Bank Nifty ends at 31,316, then we will be in no profit, no loss, and you already know Bank Nifty lot size is 25. It means 25 quantities. Now let's see its payoff graph and payoff chart as well. So if you see the payoff schedule, first let me explain each column what it is showing. Okay, so in first column it is strike prices, in second column net payoff from call sold. So whatever amount, let it be negative or positive, either we are going to receive or we are going to lose, that we are putting it in payoff from call sold, and here we are putting payoff from put buy, and net is the addition of both of these two, payoff from call sold plus payoff from put buy. So if you add these two, then you will be getting net payoff. And what is this profit and loss? Well, net profit and loss is 816 points into 25. Why 25? Because Bank Nifty lot size is 25. So whatever points you are going to receive, if you multiply it with 25, then you will be getting correct amount, means profit and loss, which you will be receiving in your account. So these are the headers I have explained. Let's see first. So what we did at 31,200, we have solved one call and we received 392 points into 25, that much amount in our account. So if Bank Nifty goes below this, then you will be receiving that much points into your account. And if Bank Nifty goes up instead of down, then how much loss will be occurring, that we can calculate. So it is very simple. Whatever difference you are getting in between this strike price, it is 100 here. Okay, so I'm writing here 100. Then you have to multiply it with lot size, because you are trading here the one lot from which you are getting this 392 points. So I have multiplied with 1. That much amount you have to deduct from premium received, which is 392. Then you will be getting, if Bank Nifty ends at 31,300, then this payoff from call will become 292. So it will be giving you 100 rupees loss or 100 points loss. So it will become then 292. If it goes further down, then you can reduce further 100 points. I am reducing 100 points because this is the gap between these strike prices. I am multiplying it with quantity. Here quantity is 1, so it doesn't matter. And if you again subtract it, then it will be 92, then minus 8, and so on. Now let's calculate net payoff from buying put. We have bought one put at the money, that is at 31,300. We have paid 376 points into 25. That will be the amount which we have paid. So what if Bank Nifty goes down? If it goes down, then how will you calculate this? This is at the expiry only. Okay, whatever data I am showing here, it is of expiry. So how will you calculate this? Well, it is also simple. You already know that if Bank Nifty will go down, put is going to give you the profit. And if we have to convert loss into profit, then what we have to do? Well, we have to add something, because minus 376 is showing loss. So if we have to increase this value, then we will be adding something. How much we have to add, that we have to determine. So how we can determine? Well, you take the difference between these two, which is 100. Then what will you do? Well, you are going to multiply it with quantity, which is one quantity here. For this buying put I am talking about, and you are going to add into this minus 376. So if you add 100 into 1 minus 376, then how much you are going to get? Well, you are going to get minus 276. So now this loss is converting into profit if Bank Nifty goes down. So that's how I am calculating net payoff from put buy. And if Bank Nifty goes up instead of down, then whatever premium I have paid, that I am going to lose. So that's why it is same. Well, now let's calculate net payoff. Net payoff is very simple. You have to add both of this and you will be getting net payoff. Now we wanted to calculate it in terms of amount. So we have to multiply these points into 25, that is lot size, and we'll be getting the amount of which we are getting the profit and loss. So here that is an amount. Now let's draw this profit and loss on our chart. Here if you see, then on x-axis I have taken the strike prices, and on y-axis I have taken the profit and loss. So if you see the positive y-axis, here it is profit, and negative y-axis it is loss. Now let's put these figures on this graph. We are getting break-even point somewhere here. That's what we have calculated, 31,316. So that will be our break-even point. And if Bank Nifty goes down, then definitely we are going to get unlimited profit. Let it go down. And if it goes up, then we'll be in trouble and we'll be getting less profit. So that's it guys for today's video. If you're watching this video, then keep this thing in mind that I'm discussing option chain strategies in this playlist. So if you wanted to learn about the option chain strategies, means majority of the strategies which are available in the market, then definitely you watch this complete playlist so that you will be able to gain complete knowledge about these strategies. If you found this video helpful, then hit the like button and consider subscribing this channel.